Have you taken advantage of saving £20,000 free of tax on the interest this year? If not, or if you'd like better to understand ISAs, this video is for you. An ISA, or an individual savings account, is simply a savings account for your savings or investments that is tax-free forever. I love them. ISAs can play a key part in your annual tax planning. Each tax year you get an ISA allowance, which sets out the maximum that you can save within the tax-free wrapper. Now, for the current tax year, that's 21-22 tax year, it's £20,000. And you can choose whether you want to invest the whole lot into one type of ISA, or whether you'd like to split the allowance between different types of ISAs. However, even if you choose to split it, you can't invest more than a total of £20,000 across the different ISA types each tax year. You must save or invest by the 5th of April, which is the last day in each tax year, for it to count towards that year's allowance. Crucially, any unused allowance doesn't roll over, so if you don't use it, you lose it forever. You'll get a new allowance on the 6th of April each year when the next tax year starts. So another £20,000 that you can save free of tax for that tax year. Any savings or investments which stay within the tax-free ISA wrapper will continue to earn interest or experience investment growth, or possibly loss, of course, year on year, and reap the tax benefits until you withdraw the money. There are many different types of ISAs to choose from. So from cash ISAs to stocks and shares ISAs, and also the lifetime ISA if you're aged between 18 and 39 and want to save specifically to buy your first home or for your retirement. There's also the junior ISA, specifically designed for children. Each specific ISA product has its own terms and conditions, so you will need to check about whether there are any penalties for withdrawing your money early. For example, a fixed rate ISA may offer you a better rate of interest on the condition that you keep your money in the ISA for a fixed period of time. But one rule that applies to all ISAs is that you can withdraw your money without losing any tax benefits, except of course the lifetime ISA, the LISA. So there's a penalty. When you withdraw money from the lifetime ISA, there are tax implications. So as long as you take the money out for the purpose it was intended, which is either to buy your first home or fund your retirement at age 60, there's no penalty. If not, there is a penalty of 25% on the amount withdrawn. But if you withdraw some money, can you put it back in the same tax year? Well, this is a popular question that I often get asked, and one of the ISA rules that's often misunderstood. So, in a nutshell, it depends on whether your ISA is a flexible ISA or not. If your ISA is flexible, you can take the cash out or the investment out and put it back in during the same tax year without reducing your current year's allowance. Your provider can tell you if your ISA is flexible or not. Lifetime ISAs are not flexible. So if you'd already put £20,000 into an ISA in the current tax year but need to withdraw £5,000 to buy a new car, if your ISA is flexible, you can put the £5,000 back into your ISA before the 5th of April, if of course you've got the money available. If it's not, then your ISA allowance in essence is reduced to the £15,000 for this tax year. The key is making sure you put the money back in within the same tax year. So, before the end of the tax year on the 5th of April, check whether you have used your full ISA allowance for yourself and any children you may have, and take advantage of this tax-free savings option if you feel it's right for you. Thanks for watching and checking out my YouTube channel. I'm Justin King. I'm a chartered and certified financial planner, and my aim is for people to live successful lives, and that often is understanding your money. If you've liked this video, please press the like button and obviously subscribe so you can get notified of any more videos that I put out, and thanks for watching. Bye bye for now.